Hi everyone, I'm Charlie Carnaccio along with Ken Mann from Freedom Financial Solutions. Welcome back to In the Black, our series of helping you as a small business owner learn how to do the things you need to do to keep your business in the black. We are in a 9-part series of the different principles that can help your business. We talked about marketing, we talked about production, we are now into accounting. Last week we talked about cash flow, how important that is, and this week in Principle 8 we are talking about knowing your business.
So there's a couple of TV shows that people might be familiar with, Shark Tank, The Profit, and what are the people on those shows always asking the people presenting or being talked to? It's always, what are your numbers in your business, right? So they're always looking to know what your numbers are, because the numbers tell you what's going in. I like to say, if you don't know your numbers, you don't know your business. Right? So the quickest way to develop problems in your business is to not be intimately aware of those numbers that are going on in your business. There are some questions you may want to ask yourself in order to evaluate how well do you know your business. So one is, do you know what your sales are on a daily basis, on a weekly basis, on a monthly basis? Could you answer that question if someone asked you? What are your top selling products, your top selling services? Can you answer that question? Who owes you money? We talked about accounts receivable in the last episode, and how long has it been since they've paid you? Do you have enough inventory, or do you have too much inventory? We talked about that also last week in the cash flow section. What does it cost you to open your doors every day? You know, people don't consider overhead. You know, you're paying rent, you're paying electricity, you're paying a telephone, you're paying internet. You have all these expenses that you need that you open your door every day, whether you have income, sales, or not. And how are you doing compared to maybe this period last month or last year or this period this year to this period last year? So those are different questions that you should be able to answer as the business owner to prove or to demonstrate that you intimately know your business.
So somebody walking up to you and asking you one of those questions, you should be able to rattle it right off.
Right.
Yeah.
And so to help you to do that, because it's not an easy thing, is we recommend a topic we call scorecarding. And that's where you take typically your 5 top business measurements that are easy to get, and you can usually get those out of your accounting system, and you just look at your scorecard. Maybe it's once a day, maybe it's once a week, maybe it's once every couple of weeks, but you develop what you think are those 5 key factors for your business. And it's going to vary from business to business to business, so I can't even sit here and say here are the ones you should be looking at, because it might be, you know, cash flow for you, it may be cash in the bank for someone else, it might be inventory for someone else. So it's going to vary from business to business to business. So if you intimately know your business, you should know what those 5 key factors are and develop that scorecard so you can take a quick glance of your business and assess the financial health. And that shouldn't take you more than 5 minutes of time to do that. So it's a very quick way to determine your financial health.
Good measuring tools that are out there to help you along with that. So through your business, you know, you've got different items, different services, different whatever. I guess knowing your business, you need to know which ones are working for you and which ones are maybe costing you too much.
Yeah.
Some of the profit centers of where.
Yeah, exactly. Profit centers is a great term. So what I've seen oftentimes, I'll look in someone's QuickBooks file and they have one line on their income side called sales.
Yeah, right.
Well, what does that really tell you about your business? You know, so for example, if I was to do it for my business, I may have a line that says income tax returns. I might have a line that says bookkeeping. I might have a line that says QuickBooks training. I might have a line that says sales tax returns. I might have a line that says payroll. And now, and those all add up to my sales, but now I can look at each one of those specifically to see just how that they are doing. And likewise, I can look at the expenses against each one of those. And so you should be looking at those numbers and say, well, geez, if this one category is only bringing in 2% of your revenue, and then you look at the expenses and you're spending 10% of your expenses to generate 2% of your revenue, that's probably a good service or product you may want to think about discontinuing or figuring out, you know, what's going wrong, that your sales aren't where they're matching the expenses that you're putting into it. So those are very easy analyses to do when you have an accounting system like QuickBooks, for example, available, and you can generate those reports very fast and gives you a lot of powerful information to make informed business decisions. So I like to encourage people to analyze trends. So what does that mean? So analyzing trends means you want to look at how are you doing this month versus how are you doing last month. So that's a trend. How are you doing this quarter versus how are you doing last quarter? That's a trend. How are you doing this year versus how are you doing last year? Right? So, and how are you doing in these periods this year to these periods last year? So in the month of June, for example, in 2017, how did you do compared to the month of June in 2016? You know, are you growing? Are your sales flat? Are they going up? Are they going down? Is your business seasonal? Is it not seasonal? And learning from all these trends and seeing what's going on in your business. So if June is traditionally a good month for you, year after year after year, and all of a sudden this June your sales aren't good, there's an indication something's changed in your environment that you need to go and look into. You need to understand to figure out why there was this change in my business, and go and look at that. So trends are critically important to analyze and give you a lot of useful information.
Yeah, and if you're not a numbers person, if you don't like numbers, you really just need to know how to read the numbers because they tell the story. That's what I love about stats. I've loved stats since I was a kid. But what I love about stats is they don't lie. So whatever it is, that's what it is, and then you have to figure out why is it that, right?
Yeah, statistics don't lie, statisticians do.
Yeah, right.
Yeah, so we hear that all the time, right? So one of the things we talked about in the past was production, and we talked about communicating with your employees. So as a business owner, if you have employees, you also have to examine from these numbers, what do you feel comfortable sharing with your employees about what's going on in your business? Because what we have found with statistics is that you get what you measure. So if you're telling your employees that you're measuring XYZ, they're going to focus on delivering XYZ. If you don't tell them, you may never see that change or improvement to XYZ that you're expecting to have. So communication, which was back in the production principles, is very important, and the information from the accounting system, you should consider sharing that with your employees to whatever level you're comfortable with.
All right, so you mentioned Shark Tank, which is one kind of show. The Profit, which is a show that I would encourage everybody to watch.
Me too.
Because I've learned so much from that show, and the way Marcus, the lead guy, goes about tackling business problems and then solving them. And a lot of it is what you're saying, those numbers. That's what he's looking at, are the numbers. But to wrap all this up, what would you say?
So basically, if your business is not improving, if it's not growing, if it's not becoming more profitable, you should really examine if this is a viable business that you want to continue to run. Sadly, we have seen too many business owners over the time of our business where they kept holding on for too long because of their love for it and their passion. And the business, environments change, things change, and the business was no longer providing the revenue, the income that they need for their lifestyle or whatever the case may be, and they held on for too long. And not only did they lose their business, but now they lost their house or something else because they're borrowing to try and keep it afloat. So your numbers will tell you, when things are going good and when it's time to consider if the business has run its course.
Yeah, good stuff to know. All right, so that'll do it for the principle number 8 in knowing your business, and then we're up to the 9th principle as we get to that next time we're together, and that is planning for tomorrow. That will do it for this edition of In the Black with Ken Mann of Freedom Financial Solutions. I'm Charlie Carnaccio. We'll see you next time.